Bitcoin is knocking on the door of a new all-time high, and it's doing so in the face of fear. Over the last weekend, many expected this week to kick off with downside pressure, and for good reason. Between Moody's downgrade of the US credit outlook and lingering uncertainty around global tariffs yet again, sentiment was leaning bearish, but instead the markets have been rallying and Bitcoin seems to be leading the charge this week. So what is driving this upside pressure? Is it sustainable? And what could it mean for the broader crypto and the traditional markets in the days and the weeks ahead? Well, folks, that's what we're going to be breaking it all down this morning for you. So from the macro catalyst to the technical setups, be sure to stay tuned. My name is Paul Sampson, and this is DataDash. All right, folks, just a little brief update on Bitcoin from where we have been and now where we are. A couple things have basically occurred over the last few months that we're all pretty aware of. We obviously had our all-time high put in place right on Inauguration Day on January 20th with some of the most bullish news at the time, and the sentiment at least. Obviously, there was bullish news all the way across, ETFs, new pro-crypto cabinet, a crypto reserve that was going to be put in place, all kinds of things all across the board here. Was also right as we entered into 2025, which is in theory, for anyone that's looking to the 4-year cycle as far as crypto goes, that was anticipated, or this year is anticipated to be the end of the bull run, that last final hurrah of this 4-year cycle, so to speak, that many would at least originally have been looking to. Personally, I don't believe that we are in the midst of those traditional 4-year cycles any longer. I actually was a pretty big 4-year cycle guy back in the day. I'm pretty much have not been so since about 2021. And I do believe that we have to approach the market just as it is, as a market. And if there's any cycle that is really important, in my opinion, it's the 18 to 20-year housing market cycle that I truly believe that crypto is actually creating its first 20-year cycle alongside that housing market cycle, which is also alongside the stock markets and everything else, pretty much all assets, right? They run these 18 to 20-year cycles, which we'll kind of get along into. And essentially the end of that era comes into play in about between 2026 and 2029. So does have a little bit of an ending date coming up soon. But all in all, I do not believe that we're going to see the traditional 4-year cycle blow off top this year, where the market has to top, and then we're going to have that traditional 1-year bear market and all those things that everyone's kind of come accustomed to in crypto. I just don't think it's going to be that simple, unfortunately. But on the flip side of that, I do believe that we have a lot more upside than most people do anticipate. Once again, going to be updating and going along with the information as it comes. But that has remained my overall bias and my overall analysis for several years at this point, really ever since the 2020 Black Swan event, let's just say. So on a technical basis, we were looking at Bitcoin coming into this quarter pretty objectively, all right? And we had a few things that occurred, one of which I have three areas on the chart basically that I've had for weeks and weeks and weeks at this point. And one of which is the yearly pivot. So that's the average price of last year. Very, very crucial to hold that for any upside. It's similar to a moving average. It just does not move. This is for 365 days. This is similar to 200-day moving average, but like once again, it does not move. And same rules apply as any other moving average VWAP, is that we are bullish above and bearish below. And when we started this quarter, I was looking at one thing and pretty much one thing only, right? Was when we swept this low right here. Now for a hot minute, I will say that between this little 5% window here, which was basically just below the yearly pivot, so that average price that once again living below it would have been bearish, above it is bullish, did give me a couple of days where I was really paying close attention here, because this was something that I was aware of that could really have set us up for a sizable collapse, downwards of $50,000 and $60,000 just on a technical setup here. Now, as someone who approaches the market pretty neutrally at most times and really doesn't get too into the weeds of the news, especially when it gets to extremes, such as the tariffs, which did play a role in our drop in this time frame. But when we got to these areas here, the news was at much extremes at that point, right? Just as the extremes were to the upside back here, very euphoric. News there was just no reason that we would have seen a move like this in theory at this time, right? When like everybody was pretty much caught off guard because of everything that was just so bullish at that time. There was really no reason. And the same thing relatively occurred down here at the low, right? And same exact setup we had at the high, where we swept the high and we took a drop. We had a new low here. We ended up sweeping that low. We ended up reclaiming on a daily time frame our yearly pivot, so our high time frame average. We took out the lows here. We had extreme negative sentiment where the tariffs just made it seem like nothing was going to improve anytime soon. There would be no reason to believe that we'd see a move all the way back up and literally erase this entire move so quickly while we were trading down in this region, right? But as far as the technicals would go, for me as a trader that utilizes these ranges on a daily basis, I've come to know that when we see something along these lines and we open up the next time frame outside of the previous range, it's likely we make our way back into it. We had a couple other reasons to note some key levels here for this quarter, which was one was our quarterly pivot. So not only do we have the high time frame average of last year that was likely to be met this year, which we did. We had a new high time frame average of last quarter, which was likely to be met this quarter, right? So that was actually right at the low side of this range. We ended up coming back to that pretty nicely right around the 21st of April. So just 3 weeks into the quarter, we got right back to our average. And like anything else, we look at the context of the market at that time. For me, it was pretty bullish. I was anticipating a short squeeze once we got to this region, which all that was is that when you're looking at the price action here, we were putting in lower highs, lower low, lower highs, lower low, and a lower high, where many were coming into the market and entering short positions. Once again, the tariff fears and the uncertainty just really drove that as far as the sentiment would go, alongside the price action, just really not doing anything too exciting. From there, we actually burst into our old range here, which one key region to note was that 89,000, which was the low side of this area. Then I was noting the 93,000, which at the time was an untapped quarterly level. We also had our naked point of control at the time. So that's an untapped volume level. And that's just utilizing this range overall. This is the value area. This is where 70% of the traded volume occurred, almost like a fair value, I guess you could say, to the market participants. And then we had the overall point of control, which is where you see the most volume, the most transactions take place here. And the price is likely to seek out that point of control once we re-enter any range, either whether it's from the low or the high. From here, we ran right into that point of control, as I said. Then we were holding our yearly open in this quarterly level so nicely for multiple days at a time. Very bullish to see something along those lines here. I did anticipate potentially coming back just down to the bottom of the range, which is a very notable and likely thing to do once inside. But overall, at this point, once inside this region, we're looking to rotate said range, meaning from low to the high in this case. And in the last update, this area was where I was anticipating if we were going to see any type of another pullback, this would be the next key area to really be paying attention for, around that $106,000, $107,000 area. And while we may see a little bit of ranging activity still around this region between about 100,000, 106, 107,000. The way that we are now consolidating under this resistance leads me to believe that we are not going to get this pullback quite yet. Leads me to believe that we're actually going to attempt a breakout of this area and a break of the all-time high and put in a new all-time high here for Bitcoin, which is my next major thing I'd be looking for here in the coming days and weeks. So folks, it's really important to basically take this step by step. Obviously, when we were trading at $74,000, I did not know, of course, how the market's going to react. All I can do is prepare for it to the best of my ability, be on the right side of it as much as I can, note the probabilities, and then put on risk and manage that risk along the way. Now, from $76,000 up to $96,000, I felt pretty confident that we were going to see that move. From 96 to 107 now, it's had to be a little bit more relevant to the context of the market as we approach these levels. And same thing as right now, when we're coming up to $106,000 over the weekend, I noted that this is somewhere where I'd been looking for a pretty big sizable resistance, and maybe we could see a 10, 15, even 20% correction, which would be pretty normal in this case. We've seen Bitcoin actually rally over 40% since last month. So a 15 and 20% correction now would not be uncommon, would be actually pretty healthy. However, the new information is present now, and we're looking at this consolidation right under this key resistance. And along with a little bit of the recent bearish news, it's not necessarily as relevant today as it was maybe on Monday as we opened up the week. But I note it because in the contrarian side of me, I look at it in the sense of how many people were probably on the sidelines of this move or not expecting this move and currently hoping and praying that it actually pulls back so that they can get an entry. That being one piece, the second piece being, once again, the technical side of things, that we're consolidating right under this major resistance in a very bullish manner, just leads me to believe that we're going to see new all-time highs on Bitcoin before the next sizable pullback. Your next question is going to be, what is that going to mean for the altcoins? What does that mean for the traditional markets as well? Can the stock market see any more moves higher? Will the SPY, S&P 500, break into new all-time highs? Well, I'm going to take a look here at Ethereum first. I think that that's a relatively large market indicator for the rest of the altcoins. And if we're going to anticipate more upside on ETH based on the technicals, I would imagine that, yes, that the rest of the market will follow. So ETH, once again, pretty much took the stairs down and is in the process of taking the elevator back up, right? Where you get this slow grind to the downside and you get these quick bursts to the back to the upside, essentially. I've noted a elevator target 1, elevator target 2. These are simply derived from a Fibonacci retracement from the overall high to the overall low, which is mixed with a little confluence around a harmonic pattern that I've indicated, as well as a high time frame average of price sitting here at 2440, which was our quarterly pivot. So same as Bitcoin, we had that $89,000 level likely to be met in Q2. For ETH, the average of last quarter, which was likely to be met this quarter, was sitting at $2,440. It aligned perfectly with our 382 retracement, which is a major fib area to be paying attention for. This was a region where we'd be looking for the first major sign of any kind of resistance and maybe a pullback at the time. Once again, we judge and we gauge the context as we meet these regions. And in this case, we blew right through it. And so far, I've been closing day after day above this area, which leads me to believe that we are going to take another leg up towards the next major area, which is going to be that target 2, which is a weekly NPOC, which is a untapped point of control, very similar to the quarterly one we looked at earlier on Bitcoin, sitting at about 96,000. This level by itself, by and large, is not something I would be noting heavily, but because it's lining up with the gold pocket, it's also noted as the B point, which what I'm referencing here is this bullish harmonic setup that once again is a sequence of Fibonacci's that is based around specific ratios with specific targets. Take it as one tool in the toolkit, if you will, but all these things that aligned at the time, and one of which just really being, again, the contrarian side of me viewing the market when we got down to these levels, which was just, if you just looked around you, I mean, people were willingly dumping their Ethereum, thinking that it had no future, again, thinking that, they've held it for years at this point, it's done nothing, everything else is either excelling around it, or maybe they only want to buy Bitcoin, or they were looking to buy it lower at that point. They thought it was going to go a sub $1,000. Only to get, once again, a huge move to the upside, leaving everybody in the dust. And I say everybody, obviously it's not every single person, but leaving a lot in the dust, either sidelined, waiting for lower, dumped at a lower area because they were afraid of it going lower. High time frame average target for the quarter has been met. Elevator target 1 has been met. 0.382 area has been met, and we're holding all of those right now with a pretty bullish outlook here. And with me looking at Bitcoin, anticipating higher as well, I do anticipate that we're going to make that next move up towards $3,100 on Ethereum in the near future here. Now, that is a sizable move from where we are now, about 25%. And if ETH is about to see a 25% day or move at least over the coming days, yes, I imagine that the rest of the market is going to look pretty well in the same time period. Now, before we move on to the traditional market, I want to take a quick pause here and highlight our official channel partner, VeChain. Because if you're serious about blockchain utility, this is a project that you should absolutely have on your radar. Now more than ever, VeChain is delivering on real-world use cases, and we're talking about a blockchain that's not built on hype, but on practical, scalable solutions that businesses and everyday users can actually engage with. Let's start with what's around the corner here. So StarGate, their new staking ecosystem that's launching in July. This is not just another staking protocol. StarGate is about creating a more inclusive, decentralized economy for the entire VeChain ecosystem, whether you're already holding VeChain token or just now getting familiar, this is the moment to start preparing. There's going to be governance opportunities, on-chain yield, and more ways to get involved in shaping the future of the network. This is part of their broader Renaissance upgrade aimed at taking VeChain's infrastructure to the next level, scaling for both enterprise and retail adoption. Then there's Stella Pay, which is incredibly exciting. It's a payment solution that lets users spend their crypto in the real world, from online shopping to in-store purchases. It's a crucial bridge between Web3 innovation and everyday life. And if adoption is the goal for the space, this is the kind of utility that actually gets us there. Another unique element is the VeDAO, a platform built to reward positive behavior and engagement. But this isn't just about sustainability or carbon tracking, it's broader. Whether you're focused on personal wellness, contributing to community-driven goals, or just building a better daily routine, VeChain is creating an ecosystem that supports that lifestyle and rewards. What I appreciate most is that VeChain doesn't make empty promises about price action or flashy gains. They're building long-term value through real tools, programs, and products, not speculation. It's the kind of foundation that holds up when the markets shift. So whether you're interested in staking, using crypto for purchases, or being a part of a utility-first ecosystem, now's a great time to plug in. You can find the link to everything I just mentioned: StarGate, Stella Pay, the VeDAO, and more down in the description below. Just look at this incredible move off the SPY, an absolute V-shaped recovery that I'd like to say we were discussing it real time just about as we were coming into this region here. A perfect example, folks, of being greedy when others are fearful, buying when there's blood in the streets, all those things. And I bring those things up not to say that the news by no means doesn't matter, because I think that the news does matter day by day. In the grand scheme, it's just I point out the extreme versions, right? When we get to those areas that after we've had such negative movement at this point, and then you get the extreme fears that come in, and not even extreme fears only. People are very fearful this entire move down. It's when the news is at extremes where you just truly can't see. You've just been getting beaten and beaten and beaten and beaten and beaten and beaten and beaten. And especially when those extremes occur right as we're coming into key areas. Either way, beautiful move out of the SPY. Same thing here, right? We were looking and monitoring this and managing this along the way. We came up and we got a rejection off of that Q1 low. And I noted this as a very important level, at least locally, to get back above for any more continuation, right? So at this point, we already had obviously a sizable move to the upside. We needed to see the confirmation above this region to get any more continued upside. From there, we had, similar to Bitcoin, similar to Ethereum, a untapped at the time. It's been tapped now, so there's no asterisk there. When you see an asterisk on these charts, it's usually an untapped region. But we had our untapped quarterly pivot, so high time frame average of last quarter, drag that all the way over to the traditional markets. They react the same. Likely to be met this quarter. So when we opened up, we actually opened up relatively close to it, and then we had that huge dump. But we've remained untapped until the 12th of May, actually. So a little bit slower, a little bit behind Bitcoin, actually, in this recent move. And we wanted to see the strength above this region. And after that, we're targeting our quarterly NPOC, which is basically our high side of the range as well for Q1. And then from here, similar to Bitcoin, I can't imagine we don't come up at this point and make new all-time highs, even if only to come up for our trend-based gold pocket, which is literally just above the all-time high. So in this $610 to $620 region, that's the next major area I'd be looking for the SPY to kind of make its way through. And if we push through that region with strength, I'd be looking for the 1-to-1 as far as the 1-to-1 expansion that's derived off this recent low. And that puts us up at $690. So 610 to 620, maybe an area where we come up, hit our heads on, get a little bit of a cool down before we reach through. If not, we breach through it. It's 690 on the docket there for the SPY for the S&P 500. Nvidia was one that we covered at the beginning of this quarter as well. Had a really nice range, basically all set above it. We started off the quarter right at the lows here, trading at around $108. Got a dip down right below 100, down into the $87 region. Got back into this area and then effectively rotated that range to the upside here. We had our quarterly NPOC, so an untapped point of control. That was a very key region to be paying attention for this quarter as well. But overall, once we got into this area, we'd be looking for that range rotation. Now, personally, I do believe more upside is to be had. Would I be chasing Nvidia at this exact moment? Absolutely not. I never chase something that's up like this, right? Something that's been seeing a 60% rally right into basically some key resistance at the moment. Even if this could continue higher, my number one goal is I always look for a red day. I'm always looking for some sort of a better entry, because in my opinion, that is the most important thing in this market is your entry, because you don't want to come into something and risk being immediately underwater 10, 20, 30%. So for me, the risk here is that my overall bias is Nvidia. The rest of the markets will continue to track higher long term, which means over the next months here and going into maybe the next year. But in the short term, I'd be more so inclined to look for just a simple pullback just off this last low to this high, which brings us actually back down to that point of control region, about 117, potentially as low as back to 104 to 106. But I'd be really looking for these areas here. I'd say really that 115 to 120 would be an area I'd be really comfortable with looking to get into any new type of positions here. And once again, that's about 15, 16% pullback. Is that terrible to have to go into and risk seeing that happen? Not necessarily. More so, I'd be more worried about it actually going all the way down to the gold pocket, right? So that'd be about a 20% pullback. So for me, I'd be looking for this region as my entry areas, potentially down to 104. I'd be happier to enter around this region with the understanding that we may see even as low as this area here, versus trying to get in at this region now. We're at potentially a little high here. And that's just how the risk that I would take on this, essentially, as far as looking for something right this moment. Otherwise, if you're a holder, been invested, I imagine that we will, whether we get the pullback or we get the breakout from here, the all-time highs will be challenged relatively soon on Nvidia as well. And looking at gold as well today, I wanted to point out that we've been really consolidating quite nicely here, and what almost appears to be a bit of a bull flag, if you would just want to take it as simple as possible from this area here. Now, I've really noted that we could see a move back down to 3,000. 2,900, and that would be the ideal area if you're looking for a brand new spanking entry. Thing is here is that, right, we may not get it. And looking around us right now in the way that gold has been just tracking with Bitcoin, where we usually see a little bit of an inverse operation with the two, the both of them have been pumping together recently. So just noting that we have this potential setup here. We've been consolidating really well. We have the 1-to-1, which is my main target still for gold, which potentially in the next coming weeks, months, however we get there, whether we get the dip first is the question, right? This is a really tough spot to be coming in and purchasing gold right this moment. For me, once again, I'd rather look for a decent red day, which we've gotten a decent one so far, about 10% pullback. Had you gotten in right around 3,100, I still would be personally looking for a deeper discount for a brand new entry. But if I'm a holder and if I'm looking at where gold can go from right now, I still think that 3,600 is that area that we're going to land on. And then looking at this in a simple bull flag of this recent consolidation, that aligns well with this as well. And yeah, 3,661 is still where I envision gold to make it to in the nearest future here. As we continue watching Bitcoin press toward these new all-time highs and the broader market shake off the bearish expectations, remember that staying ahead of the curve requires more than just watching the price. It takes staying plugged into the technicals as well as the fundamentals that are driving it all. A quick thank you again to our channel partner, VeChain, a project continuing to build real-world utility that stands out in a space full of speculation. Be sure to check out the link below to explore StarGate, Stella, and everything else happening in their growing ecosystem. And if you want to go deeper and follow along with both Nick and myself, don't forget to check out the DataDash Pro website. You'll get access to Nick's macro newsletter, plus our private DataDash Traders Club, where I share daily updates, live streams, exclusive setups, and educational resources to help navigate these markets with confidence. As always, everybody, thank you all so much for watching. Please be sure to like, subscribe, and drop a comment with your thoughts on where Bitcoin is going to head next. I'll see you all in the next video, and until then, everybody, cheers.